Exchange. We talk commodities now with Josina Solomon. She's a commodities analyst at RMB. A very good morning to you, Josina. Commodities have been on somewhat of a roller coaster ride. Like looking at the Brent crude price at this stage, sitting at $106 per barrel. We had it sitting at around 88 a few weeks ago. So your thoughts on what's happening within the oil space?
So I've definitely seen that oil price back above that $100 barrel last week. It's been trading comfortably higher around the 104, 105 levels over the past few days, largely been on the back of the broad rally we've seen in risky assets. We've also seen renewed tensions, Iranian tensions still remaining quite elevated. So that geopolitical risk premium remaining in the market, which have provided this upswing that we've seen in the oil price over the past few days.
So upswing in the oil price, where are we seeing oil going from here on? Are we going to perhaps see 107 being hit here?
Definitely some support, a resistance level around that $107 barrel level in the shorter term. However, we have recently revised lower our oil price forecast for the second half of this year, and we believe that oversupply conditions in the global oil market should continue to weigh down on the price over the for the second half of this year, which should limit that uptrend in the oil price.
So it's pretty hard to call at this stage.
Yeah, so currently we're seeing our view is for $100 by the end of the $100 a barrel at the end of this year.
And now the energy regulator saying we could perhaps see an increase in fuel prices in August. We did, however, see a fuel price decrease in June.
Yes, so
July.
Yes, so the department is looking at around at least a 7%, a 7 cents a litre increase in the petrol price for August. So definitely the higher oil price has offset some of the stronger rand exchange rate that we've seen over the past few weeks. So consumers are up for another fuel price increase of around 7 cents a litre then for the petrol price.
Let's move on to the gold price. We have seen that come under pressure. We had Federal Chairman Ben Bernanke having his testimony over the past few days. Did you get some sort of clues of where gold could possibly go going forward?
Yeah, so gold has been very interesting since the start of this year. Over the last few weeks, that metal has been trading like a risky asset. We saw it following the rest of the commodity complex lower. What's interesting though is that we haven't seen the gold price tracking the rest of the commodity complex higher over the past few days. So largely on account of the disappointing, the reluctance from the Fed to boost for further monetary policy easing. So definitely we know that over the past few years, the gold price has rallied on the back of ample global liquidity conditions, low global interest rates. So this fear that of receding liquidity has definitely dampened the outlook for the gold price. Nevertheless, we're still fairly optimistic on the gold price. We see gold ending the year at around $1,800 an ounce, largely on account of investment demand remaining quite elevated, and that just search for yield and search for the commodities as an alternative asset remaining quite favorable for the gold price.
Now looking at the gold price, you're seeing it around $1,800 per fine ounce. But let's say the Fed does decide to stimulate the economy and implement a QE3. Could it even be more than that?
Well, that is not our core view, but if that should happen, that will definitely provide uptrend. We could see gold touching that $2,000 an ounce level. So QE3 will definitely provide that extra liquidity in the market to just push gold higher to those 2,000 record high levels then.
Let's look at the copper price at this stage. Also been fluctuating over the past week. We did have data coming out of China seeing growth at around 7.6%. Where could we likely see copper going at this
So copper, the base metals market has been fairly mixed. We've seen metals that are likely to be in a deficit market, like your copper, has definitely been supported by the uptrend that the risk rally has, and has also been finding support with a deficit market then. However, your metals such as aluminium, which are expected to be in a surplus market, have actually been on the downside. We've seen pressures, and when commodity markets have been falling, your base metals that are expected to be in a surplus have been falling sharply, whereas your coppers have actually, metals such as copper, has been fairly supported at levels. So definitely outlook for China remains a key driver. The outlook for China remains a key driver of metals markets. So going into the second half, fairly optimistic on the outlook for base metals, but like I mentioned, the metals that will be in deficit market like copper, likely the uptrend to be much faster than metals that are supposed to be in a surplus market.
A lot of people are pretty mixed on the Chinese growth. Some saying that China seems to be inflating their numbers. We've seen growth around 7.6%. At RMB, what type of rates could we perhaps see coming through from China?
Yeah, our house view is for the Chinese economy to record growth of around 7.5% for this year and 8% for next year. So fairly moderate growth, but still remembering that 7.5 is still a supportive level for metals demand. We still see going into next year that the monetary policy easing that we've seen in the Chinese economy will also remain supportive then for metals demand going into next year. So that should also provide that uptrend in metals markets into 2013.